Bitcoin is all the rage. Your friends are talking about it. It's on the news. It's trending on social media. We just had a seminal moment for digital assets with the approval of the Bitcoin spot ETF. So what I set out to do in this video is to provide context on why someone would own Bitcoin, the tailwinds surrounding the digital currency, what the proponents of Bitcoin would say, what naysayers would say about Bitcoin, and then why the ETF is such a big deal. So follow along with me. I'm going to share some slides. I'll try not to get too deep in the weeds because digital assets can be complex and confusing. Thanks for watching and thanks for listening. Here we go. Okay, so looking through a traditional investment management lens, right? An investor is building a portfolio, and you've got stocks and bonds, maybe some real estate, some gold, some cash. Asset allocators are always looking for assets that they can add to a multi-asset class portfolio that improves the risk-return framework. So if I can bump up the rate of return while lowering risk or keeping risk the same, the asset that I added is a benefit, an improvement to that traditional portfolio. So what we've done here is we've looked back since Bitcoin has been a thing, and we're simply looking how digital asset, well, there's several digital assets here, but we're going to focus on Bitcoin, BTC. And we're basically going to track how Bitcoin moves in relation to traditional stocks and bonds. And we have passive equity like an index, active equity like an active mutual fund that has a manager that's buying and selling stocks, trying to beat an index. Same thing on the bond side. And blue basically means the asset is not correlated, so moves inversely. And the darker red means the asset moves 1-to-1, so moves closely together. And you can see Bitcoin in active bonds right here, 0.13. It's a very low correlation or almost no correlation. So if Bitcoin goes up, active bonds might go down. They might go up a little bit, but there's really no correlation to active bonds and Bitcoin. The same for passive bonds. So we can conclude that Bitcoin and passive or active bonds aren't really moving together. So that potentially could be additive when you're looking at the risk return profile of a portfolio that has Bitcoin added to it. Looking at equities, you can see the higher this number, the more closely it moves together. So we're right about here on the scale. So not quite 1-to-1, but there is some positive correlation between Bitcoin and equities. And I think this data is as of 2023. I would guess that during 2022, that really ugly year, Bitcoin and traditional assets were moving closer together or closer towards one than these historical relationships in non-crisis years. So this is something that asset allocators are watching, how Bitcoin fits in a traditional portfolio and how it moves in relation to traditional stocks and bonds. Those of you know I'm not a fan of predictions, but this is where Bitcoin closed the end of 2023, about 42,000 per coin. And there's a lot of smart people out there that think Bitcoin could go much, much higher. Now, some of these predictions are bordering on delusional, and some of these predictions are made by folks with a vested interest to see Bitcoin go higher because they own a lot of it. So take it with a grain of salt. Just know there's a lot of smart people that are interested in Bitcoin. There's a lot of smart people that fought for the Bitcoin ETF to allow Bitcoin to be more accessible and take the friction out of the buying of Bitcoin process. That was a big deal. So I'll just leave that there. I'm not saying that the Bitcoin's going to 100K or 150K, but just know there's a lot of smart institutions, a lot of smart people that are all in on Bitcoin. Okay. So one of the problems I've personally had with Bitcoin or any digital asset and other digital assets is investors weren't really using Bitcoin or other cryptocurrencies for their utility, meaning they weren't using Bitcoin to send money to their friends or shop at the grocery store or buy a car. You can still argue that's the case, but it's less so. And this jumps out to me where people are starting to transact in Bitcoin. Now, this is a stat from YCharts and American Express that Bitcoin transaction volume is $1 trillion or was $1 trillion in 2023. That's over 2 times more than American Express. Okay? Coinbase has more than 98 million accounts. So Coinbase is a popular, public, regulated U.S. company that provides a exchange, much like Charles Schwab or Fidelity, where someone could get on and buy various digital assets. They can buy, sell, or send money to their friends or another wallet. So this uptick in accounts and adoption, transaction volume, really is a nice win for an emerging, eventually maturing asset class. I'm not saying that it's a finished product yet or everyone's using Bitcoin, but this is a step in the right direction. Okay, so let's talk about younger people, because younger people don't view Bitcoin or any other digital asset as a speculative asset. Many view it as the new digital money, a safe haven even. So these are some stats from some various marketing companies. This is influencermarketinghub.com. Took a poll, and 67% of millennials view Bitcoin as a safe haven. Now, this is obviously going to change by generation and age, but this is really a thing. I have many peers that own Bitcoin. I think there was a stat out there that said over 50% of folks under 50 have investments in digital assets. Furthermore, even the younger generation, younger than millennials, teens, would choose crypto over stocks. 51% call crypto or digital assets the future of investing. And this is from T. Rowe Price. So there is a demographic that has fully adopted the idea of cryptocurrency, of sending money without a centralized institution like a bank telling you what you can and can't do, charging you exorbitant fees. So this is how young people think about money now. And this is a stat I find amusing because a lot of big banks, a lot of Wall Street have publicly said Bitcoin's a scam. This is not the future of money. It's speculative. And there might be a shred of truth to some of those comments. But I always say watch what they do rather than what they say. And almost every major bank, every Wall Street bank has dedicated teams to building blockchains, seamless payment systems that use blockchain rather than the centralized clearing Federal Reserve that's happening now. So every large bank is interested in this. They're investing in it, even though they don't publicly say it. If you dig through the reports, the quarterly reports, if you read between the lines, they're very much interested in this because it can save them money and allow payments, processing times, settlement times to become much quicker and much cheaper. And here's some additional stats. It's funny that the CEO of JP Morgan Chase, Jamie Dimon, has been the most outspoken bank CEO against Bitcoin. He's always bad-mouthing it. But when you look at what his company is actually doing, they've built their own blockchain. Some say they're furthest along with digital currency adoption and payments and blockchain development. So again, watch what they do rather than what they say. And JP Morgan estimates that blockchain will annually save banks $120 billion in cross-border transaction costs. Here's another stat from PricewaterhouseCoopers. Crypto will add almost $2 trillion to the global economy by 2030. Now, this is rather vague. It might be outlandish. It might be understated. But many large institutions see this as the future, even though they might not publicly say it. Now, I'm not going to read all of these. This is from a blog that I wrote a couple years ago. But this is what the Bitcoin enthusiasts will tell you. These are the bullish cases for Bitcoin. And probably the biggest one is Bitcoin operating on a decentralized network, meaning no single entity like the Federal Reserve or the government has control over Bitcoin. They can't print more Bitcoin. They can't change interest rates up or down. They can't change the supply of money. It's a fixed supply of 21 million coins. Bitcoin is a bet against the legacy government, financial, and political system. For those folks that think the world is ending, Bitcoin is a pretty good hedge if you really have strong conviction that things get worse before they get better. So if you want to dig a little bit deeper in these, I advise you pause the video and you can go through these. Here's what the pessimists will tell you. That it's a Ponzi scheme. It's not tied to anything. There's no physical asset. It's not backed by a company or an entity. It has no cash flow. A lot of people say Bitcoin is used to fund illegal activities. Now, there's varying shreds of truth to some of these. Some of these don't really hold water, but these are some of the popular narratives with Bitcoin. Probably the biggest detraction for Bitcoin that I personally had, I talked about it earlier, is that people aren't using Bitcoin for what it was originally intended for, and that's a seamless way to make borderless money transfers. Very cheap, very fast. I personally sent money via Bitcoin to a friend. It took less than 15 seconds, and it cost pennies. So that's much more efficient than the legacy banking system. The other issue with Bitcoin is it was very confusing. Very high barriers to entry to purchase. All of that has basically gone away with the emergence of the Bitcoin ETF. So that's why this is a big deal. The Bitcoin ETF has basically made it seamless for anybody to go out and get exposure to Bitcoin. So before, you had to go to an exchange like Coinbase. You had to purchase it. You had to store Bitcoin in a cold wallet, or you had to store Bitcoin in a hot wallet. And it was very cumbersome to transfer and confusing to transfer. You were exposed to fraud and risk and hacks. That's all changed. Now you can log on to a Schwab, to a Fidelity, purchase a Bitcoin ETF. So the institutional adoption, taking away the friction to buy Bitcoin, that's why the Bitcoin ETF is such a big deal. If you have any other questions about Bitcoin or why someone would own it, or just any general questions about the future of digital assets, feel free to shoot us an email at insight@pureportfolios.com. Thanks for watching. Thanks for listening. We'll see you next time.